Hello, my name is Anne-Marie Chidzero, and I'm the CIO of FSD Africa Investments based in Nairobi. Over the next 40 minutes, we're going to be exploring the urgent need to address the housing crisis in Africa, in particular, the need for affordable housing. We'll be speaking first to Kezia Rust from the Center for Affordable Housing about what needs to be done to unlock the finance required to fund this critical infrastructure. And we will be speaking to the team at International Housing Solutions, a real estate fund manager that has developed a pioneering model which is helping to make affordable housing an investable asset class across Southern Africa. And finally, we will be speaking to Safala Capital, who are driving real change in South Africa and Zambia. I think we can agree that having a safe space to call home, a roof over your head, is a basic human right. However, across Africa, this need is increasingly not being met. A problem that has only been exacerbated by the recent COVID pandemic. During the pandemic, many African companies went into lockdown and people were asked to stay at home. With the UN estimating that over 60% of African urban households, or 238 million people, live in slum conditions, we have to question the assumption that a home provides a place for health, safety, and well-being. COVID-19 put a spotlight on the crisis Africa faces in providing access to adequate shelter that provides safe water and sanitation facilities, sufficient living area that is not overcrowded, dwellings that are structurally sound, and that their tenure is secure. Not only is housing a human right, but it is also an asset and a contributor to GDP. The construction, maintenance, and transacting of housing, which includes both sales and leases, contributes substantially to economic growth and job creation, which can have very tangible local impacts. Research on the impact of housing on economies across Africa found that its contribution to GDP can be as high as 14% of the total economy, taking both housing construction and rental into account. If housing production were to be increased as a key economic recovery strategy post the pandemic, this would have a significant impact on GDP overall. Housing is also central to achieving all SDG goals. Quoting the work of the Center on Affordable Housing, while housing is explicitly articulated in Target 11 of the Sustainable Development Goals, it is a key component of sustainable development across all of the goals. Good housing drives access to basic services, contributes towards inclusive growth, and supports the development of a sustainable future with a direct impact on the factors that contribute or mediate the effects of climate change. Investment in affordable housing will therefore have a profound and direct impact on at least 14 of the SDGs. To find out more about the state of finance for affordable housing in Africa and the investments needed to drive the scale to achieve the SDG target by 2030 of access for all to adequate, safe, and affordable housing and basic services, I paid a visit to the Center for Affordable Housing in Johannesburg and spoke with Kezia Rust. Kezia, thank you very much for spending time with me this morning to unpack the complexity of the affordable housing market space. You've made your life's ambition affordable housing, or trying to find the financial solutions to make affordable housing a sustainable market. You set up the Center for Affordable Housing about 12 years ago, I think. I've known you for more than that, but you've really been working very hard in this space and have collected a tremendous amount of data across the continent. So tell us a little bit more about what is this gap between the demand and supply for affordable housing?
The demand question overwhelms people all the time, because when you fly over cities or when you drive through cities, you can see evidence of demand. People living in informal housing conditions, lots of informal settlements, lots of overcrowding, poor quality housing. We think about it, or we talk about it a lot in terms of backlog figures. And those are huge and mind-boggling. So Nigeria, 17 million units, Angola, 2 million units, growing at about 100,000 units per annum. Kenya also about 2 million units and growing at 350,000 units per annum. In South Africa, we have a fabulous housing delivery program that the state has championed, and still we have a backlog of about 2 million units. But you hardly know what to do with those numbers because they're beyond any sense of the possible. So when we think about backlog, I think it's useful to then start to segment that into different pieces. Think about different niche markets. We have new entrants into the city. So urbanization rates, a city like Kampala, 6% urbanization per annum is huge. You've got new family formation, so small families, and then they grow over time. You have demand for student housing. And now so many countries are developing special industrial zones, which will require worker housing. And so there are different niches that we can think about, and then also the different ways in which people use housing, ownership housing, housing for rental. But it's a lot. And cities are getting denser as more people are moving in. And there's a huge demand on those local economies to produce productive labor forces. And so there's a huge need. You then start to think, well, what is the supply that can respond to that? And if you think about your classic, in your imagination, developer-driven housing, it's not even a drop in the bucket. It's very, very little. The Kenya National Bureau of Statistics says that they estimate about 12,300 units per annum being delivered by the formal sector in Kenya.
And the demand is?
About 350,000 units.
That's why you have all of these informal settlements.
Well, exactly. And then how do you define informal, right? Because we look at it and it looks, you can see that there isn't water or sanitation. So there's a sanitation need that needs attention. Some houses are built very formally in informal settlements, but they lack the underlying tenure. They don't have title. And so then starting to tease out that, how can we begin to respond to the demand in terms of the particular shortcoming that's undermining quality housing? And for that, we need to look at our diversity of supply. Large-scale developers who can deliver developments for people who want to buy houses. But we know across the continent that housing affordability is seriously constrained. Right. And the vast majority of people in urban areas, given the financing situations, the availability of finance and its cost, and then also their income, can't afford to buy a house that costs more than about $10,000. So you need to think about other forms of supply as well. And that could be households offering backyard rental. It could be households building their own homes. And the majority of housing across the continent is actually built by households themselves, and even in urban areas. That's not the most efficient process.
So what's stopping the investment flow?
Split it up by the value chain first and think about that. And a housing process is a long-term thing, and it relies on so much activity by so many different players, and intersection with the public sector and participation of different components of the private sector. So you have an idea to build a house or a housing development, and then you identify land, and you need to check how the land, what the rights are on that land. Are there services attached to that? You need to invest in those services. Then you need to satisfy all sorts of requirements in terms of the environmental compatibility or the structure of the houses and so on, and the bylaws. And then you build your house. And then that goes through a whole lot of steps, statutory requirements that you have to satisfy with the government. In many cases, there are blockages in that process because the time it takes to satisfy the statutory requirements takes longer than what the legislation says. Then you need to sell the houses, which means you need finance, end-user finance, off-take finance for people to buy them. Or they may go for rental, and then you need management capacity. And then it needs to persist over time and stay quality and not fall into disrepair. So if you think about that housing value chain, delivery chain as a horizontal chain, and then finance intersects with that vertically. You need the products and services to enable each link of that chain. So land finance, infrastructure finance, construction finance, and then offtake finance. You need the capital to support the businesses that become the management agents for rental housing and so on. All of those different financial products then need they need someone to deliver them. So you need the institutions that can do that at a level of scale. And they need to be sufficiently convincing in their capacity to do that for investors to be interested to put their money there, right, and not into something else. And so it is a complex system. It depends so heavily on the capacity of government at national level, but also at the local level.
We recently invested in a fund, the IHS fund, that is providing finance for affordable housing. So they work with developers. And as part of that investment, we're really trying to crowd in more capital. So we supported the Center on Affordable Housing on their open access facility. Tell us more about that.
It's so exciting. Yeah. And it's such an important thing to do because every time a development happens, we're creating data all the time. And start to think about that a little bit like exhaust, right? So the effort of producing something. And when a developer is going through that value chain, and instead of taking the 2 months that the legislation says for a title deed to be issued, it takes 10 months. That's valuable information that I want to go and tell to the Nairobi County government and say, that difference of 8 months costs this much money and is impacting on the delivery process in this way. So what we're doing is we have this open access approach where the principle is that as an investor, you require your investee to provide data on their experience of the development that they're undertaking with your money. Right. That's perfectly reasonable, but usually that's kept in a boardroom and it's not shared. And so what we've added to this initiative is to then say, well, let's turn that into something useful that doesn't compromise any commercial interests, but in fact broadens the opportunities for all sorts of players to engage and to learn from the experience, including the government itself. We have so much excitement in this. I mean, people are a little bit wary about sharing. Right. Yes. And well, we all struggle with that. But we're hoping that if we start to show this over time and we show the benefits so that you have a set of data that you can actually benchmark your own development against. Right. And then you can see, am I ahead or behind the curve in this sense? And then you also have material that you can take with you to negotiate with your public sector counterparts around particular things in the developments. What we want to do is to make the development process easier. Right. And if it's easier,
there'll be more investment.
Exactly. More investment by developers who see that their barriers to entry have reduced, that they can engage. And that excites investors because they can actually imagine the return that they would yield from that.
Can you tell us your wishes for post-COVID-19 recovery and what role does affordable housing play in that?
And just making sure that people live in good, comfortable environments. Now, doing that is going to make a big difference on the recovery, on the economic recovery. We know that our economies have suffered terrible knocks. And the thing that everyone is saying is that looking forward, we have to do so much more with so much less. Governments have less resources, companies have less resources. Housing is kind of magic in that way that as you invest in it, you stimulate economic activity and there's growth. And if I can give you just a bit of a back of the envelope number,
great, yes.
We were looking at, we've been trying to calculate this, and of course the numbers are enormous, but it's just get your head around it. Mm-hmm. So let's pretend that across Africa's 54 countries, we could reach a delivery capacity of 5 million units a year. Should be, given our backlog figures, that's kind of what we're pitching for. And we want to do that for, let's say, 10 years. If we did that, and let's say the house was $7,500, I'm excluding land in this case, $7,500. So we could stimulate almost $40 billion of direct economic impact.
Wow.
And then if you think about, well, let's split that up, looking upstream, the primary, secondary, and tertiary sector inputs, that would be about $22 billion per annum. And 80% of that is manufacturing sector. So that's central to our private sector development strategies that don't even mention housing. Well, they can serve housing by building the goods and services that need to go into the housing process. And then you've got about $18 billion that fit within the value added by just the construction companies building.
Tiles of building.
Exactly. All of that.
All of
Yeah. Within that, that's about $6.6 billion of wages,
Wow.
which would support about 1.3 million jobs across the continent per annum. That's enormous. And that seems like it becomes self-fulfilling because those 1.3 million jobs then have incomes which they will probably want to invest in their own houses.
Kessia, thank you so much. That is just mind-boggling numbers. I think really compelling story for investors. If you want to be part of this recovery process, have an impact and make a return. Thank you very much.
Thanks so much for the opportunity.
That was a fascinating discussion that underscored the complexity of the affordable housing market. Not only is it about the types of financial products offered by the market to access housing, it is also about the availability of housing stock that is affordable and provides good access to clean water, sunlight, space, and greenery while permitting ease of social and economic life. International Housing Solutions, IHS for short, seems to have figured this out. They finance the development of energy-efficient, affordable housing communities that permit access to the infrastructure that allows for safe, healthy, and productive lives for all. IHS's pioneering investment models have led to the disruption of affordable housing markets in Southern Africa. To find out more about their secret sauce for making affordable housing an investable asset class, earlier this week, I had the opportunity to meet two of the IHS team. Thank you, Carl Konati and Kioi Wamba, for sharing your perspective with us. Carl, you are the MD of IHS and one of its founders. What moved you to establish IHS, and why do you think affordable housing was an investment class?
So at the time I started IHS, I'd spent about a decade working in affordable and workforce housing in the US. And there, housing really was already an investment class, albeit one that was smaller than the other real estate types. And there was a lot of data then available that said that housing could produce similar investment returns and at lower volatility than the other real estate types. So, the business case was basically established. And then plus, the noughts were really a boom time in many, many places, and capital was really looking for new investment opportunities. And so it really felt like the right time to take this for-profit approach to affordable housing to other places where it hadn't had that level of focus up until that point.
That's fascinating, Carl. So how did you sell this to your investors?
So ironically, on our first ever close, we reached $120 million. And that was actually the easiest capital we ever raised. It didn't feel like it at the time, but looking back, it was really pretty easy. So you had the two factors I just mentioned, a good investment experience in the US, capital searching for new opportunities. And then added to that, Africa was really seen as the next big growth story, and not just in the long term, but imminently, right then. And nobody else was offering that in the housing sector, at least not to the investors that we managed to reach. And finally, the idea of the double bottom line of doing well while doing good, that was really starting to gain traction. And so the social benefits of affordable housing were really part of the appeal. Now, the pitch has really shifted since then, with impact really coming to the fore. I think that investors understand that African urbanization and population growth are going to lead to hundreds of millions of households being formed in Africa over the next few decades. And that's just true, no matter what we do about it, right? And so it makes an enormous difference to people's life experience, to economic opportunities, and consequently, really, to the welfare and the economic growth of nations, that housing be decent, right? And then from a climate perspective, it's absolutely imperative that those hundreds of millions of houses be energy and water efficient. And so investors understand this. They still want their investment return, to be clear, but they also want to achieve the climate goals that we all share. And so they understand that this is something that absolutely has to get figured out. And that is now at least half of the business case for making the investment.
Fantastic. So let's get down to the secret sauce. Tell us more about your business model.
So I think four things are important. Number one is that everything that we do is green. Right? We use IFC Edge for that, and we won't touch a project that doesn't meet that standard. And that really works. We are way ahead of Edge expectations in South Africa, and people are saving real money on their rents, right? It's about a month's rent per year in savings for families, and that just makes a huge difference. So that is completely core to us. Secondly, we don't take on huge projects. They're just much too risky, right? Your timing is very, very uncertain in terms of implementing them. You're dependent on future delivery of bulk services, and there's no way that you're going to get a fixed price contract that you can actually rely on for a huge project. So for us, the sweet spot is 200 to 500 units, and we really know how to make that work. And then we'll do many, many, many of those projects simultaneously, and that's really what enables us to do what we do. Thirdly, we do both rental and for sale, and we're able to pivot between rental and for sale, across the portfolio, but even on phases of individual properties, and that flexibility makes a big, big difference. If you're going to do rental, you really need high quality property management, and it's core to our business that we do that internally. We've tried other solutions, they haven't worked. But for us, owning our own property management business and doing that in the portfolio translates into occupancies in the mid-90s and to really almost perfect collections. And that's been true right throughout the COVID period, which is a huge testament to the effectiveness of that strategy. And then finally, our business model is to be copied, right? In the end, you have to raise capital. Investors give us capital not just because of the housing we'll produce, but also because they think that we will figure out solutions to the pressing problems, right? And that those solutions will get seen and get copied throughout the industry, and that really multiplies the impact of those investors' investment. And so that's very much key to how we succeed in life as well. Example of that, IFC and KfW gave us money really to roll out Edge in South Africa, to really catalyze the market for green housing so that lots of people would do it, residents would demand it, and it would become sort of part of the norm. And that's really been successful. In Kenya, the equivalent is the open access scheme, where the learnings from that program will really be distributed throughout the market. And that, I think, is a very, very big and important benefit as well.
Great. What would you say are the biggest challenges to driving more scale?
So the first is equity capital, pure and simple. We can figure out the solutions to almost everything else, but the lack of equity capital, that is our key constraint, and it has been since we started, and it continues to be today. And that, again, is why we're so keen on this open access idea, because we think it'll get many, many, many more investors comfortable with investing in affordable housing. We think that's absolutely critical to the sector. And secondly, it's municipal processes, right? They delay things, they drive up the costs, and they hugely drive up the risks involved in this. And so getting those running smoothly, which they do with some municipalities, is absolutely critical for what we do.
Koi, can I turn to you? You're based in Kenya. I think it's safe to say that the majority of urban dwellers in Nairobi live in accommodation developed in the informal sector, where construction standards are poor and services substandard. Why do you think developers are avoiding the affordable housing space?
Thanks very much, Anne-Marie. I think fundamentally, if we look back, we will find that this particular asset class is one that has traditionally been done by governments, been done by large pension funds, been done by large municipalities. And this actually you will see world over. And in Kenya, it is very similar. There are a few projects that have been done for affordable housing, but again, these were basically delivered by bespoke entities that the government set up and the government partnered with them. So because of that, you will find that not many private institutions have had the experience or the actually opportunity to actually get into this particular asset class. So because of that, we have seen that not many developers are in this space. And in addition to that, you find that whereas there are similarities with other different real estate sectors, this particular sector of affordable housing has its own bespoke requirements. I think one of the key things for any developer is just the whole issue of how do you create economies of scale within the construction framework. And that in itself is a challenge. And not many have actually been able to achieve that. In addition to that, there are the other various challenges we have in our particular market regarding land tenure, land titling, the whole issue regarding construction finance, project management, and construction management at this particular stage. And I think finally, also, you will find that even the whole issue about post operation management or property management is also something that is lacking. So, those are some of the challenges I think that many of the local developers have actually faced. And last but not least, which I think is one of the most critical, is just whole issue regarding offtake. If you know if a developer goes and builds a couple hundred units, who's gonna buy them? How long will it take to build them? If the contractor has gotten some financing, this becomes a big issue. So it is a big risk, and various developers have actually shied away from it. I think those are some of the issues, among others, that people can think about.
So, how do you think IHS can change all of that?
Well, I think the fact that IHS is the largest developer who has produced the largest number of affordable housing units in Africa says a lot. I think IHS has taken time to understand this particular product. They have gone through various cycles. They have been very fortunate to have done various projects in different geographies and different products. They have learned through some of the challenges, some of the mistakes. They have gone through, various economic cycles in different countries, the economic collapse in the late 2000s. So I think that has helped them mold them and help them understand how to basically navigate through this particular sector. And I think as a result, they have been able to refine the process of delivery, the process of understanding and identifying the key risks along the full value chain and how to manage them over a period of time. And then fundamentally, also, they've also been able to focus a lot on the offtake side, where they've been able to partner with equity partners who have specifically focused on this, which is one of the biggest challenges, whether in South Africa or other countries across the continent. So I think that actually puts them in a very good position. And I think also one of the key things that they do not, that not many do, is that property management is something that they do on their own. And so you find that they are in control of all the critical elements within the full development cycle. And I think that is one of the key things. There are not many other companies that do that. And I think that is what actually brings a lot of advantage for them to come into a market like this.
Great, thank you. And finally, what would you say to investors considering the housing market in Kenya?
Oh, there's so much. I think the key things is Kenya has a population of 50 million plus. The lower middle income class is the fastest growing income class in the country. Their income growth is growing. The GDP has been strong in the continent. The housing shortage, unfortunately, is also growing. And that just says that there's a very big opportunity around, and there's a big shortage. And this opportunity is one that we would embrace and invite as many investors to come on board and join us as we try and solve this critical problem in Kenya.
Well, Koi and Carl, thank you so much for sharing your secret sauce with us, and we wish you well both in East and Southern Africa.
Thanks again.
Thank you.
Whilst the need to provide access to affordable housing across Africa is huge, it is clear that innovative financing models are beginning to emerge, which is providing a great deal of hope to many. Another company that is providing unique finance solutions to build, buy, and rent affordable homes is Safala Capital. And earlier, I spoke to Managing Director Michael Waller. Thank you, Michael, who's the founder and MD of Safala Capital, another pioneering firm in the affordable housing finance space, but who's solving a critical problem of access to finance to build, buy, and rent. So I'm here with Michael just to find out how Safala Capital is actually disrupting the market. Michael, thank you for being with us. The tagline on your website is Rethinking African Housing Finance. Can you start by telling us what problem you're trying to solve and what is this rethinking?
Hi, Anne-Marie, and thank you very much for having me on your discussion. I guess the fundamental starting point for us in housing finance is we're interested in Africa and African markets, which makes us a little bit unique already. But housing in Africa is a particularly complex space when you consider that there are 50 different countries, and each country has got its own specific issues, which are myriad and many. And those issues range from difficulty with title deeds, to lack of developer finance, to lack of end user finance, to shortage of construction skills. So each country has got a specific problem. So what we've tried to do is we've tried to take a step back from the sort of individual markets and say, how is housing being delivered in Africa? In other words, what is currently successful? And the reality is that if you look at the lessons across all markets, the primary means of housing delivery are individuals who are building their own homes. So regardless of what problems exist in what markets, whether it's Nigeria, Ghana, Zambia, Kenya, problems in those markets are stopping developers delivering at scale. So individuals are stepping into that niche and they are building their own homes. So really all we've tried to do is approach the problem from a slightly different perspective and say, how do we support individuals to build their own homes? How do we enhance and improve and help people with a service in something that they're already doing? So our business, Safala Capital, is basically a venture capital or private equity business, and we seed businesses in African countries to help fund people to build their own homes. And that's a process that we've sort of built out and delivered over the last 5 or 6 years or so. So our perspective is a little bit different. We focus on individuals. What we found is that typically the kind of the best and the brightest middle class African citizens are out there building their own homes. They're not waiting for developers to build for them. They typically go out, they'll buy a plot of land, and as and when their salary, they've got a salary surplus at the end of the month, they will do a bit of building, and they will get an informal contractor to come and work on their site for a couple of weeks. Perhaps they've got a couple of $1,000 available to move from foundations to sort of build some walls, and so they will build on an incremental basis. So we really come in and we say, okay, well, how can we help people speed up this process and make them more effective in building their homes faster rather than building over 4, 5, sometimes 8 years? How can we help them finish this house in 6 months? So really, Safala Capital, through its sort of main subsidiary, Zambian Home Loans, has developed a really neat model where we step in and help people to complete their homes better and faster. We get them to finish faster.
Can you tell us what households are looking for in Safala?
Sure. I think households are looking for 2 things really. One is service, and the other is funding. It's kind of self-explanatory, but digging a little bit deeper, I guess most of our customers are people that are building their own homes, or at least owner managing the construction of their own homes. And many of them are doing it for the first time. And anybody who has built a house for the first time knows that it's quite a complicated and often daunting process. Just the nature of trying to understand whether you have enough money to complete a particular set of plans. Who do you go to? Which architects are credible? And ultimately, how do you take an idea of a house and make it a reality? So I think that often the primary aspect of our business is helping people understand that process. And we do that mostly by sort of bringing in-house services or in-house specialists into our subsidiaries. So, for example, our business in Zambia has a quantity surveyor who is the first point of contact with a customer. And the customer will typically bring in their plan, which might be a sketch on a piece of paper. And our quantity surveyor can very quickly, in 5 minutes, sit with that person and give them a high-level sense of what it's going to cost to build that structure. So that we can very quickly have a look at what their earnings are and whether they can afford a mortgage, which is going to get them to completion. And I think that's where we differentiate ourselves slightly, is we help people understand what it's going to get to the point of completion. There are a lot of lenders out there, micro lenders, unsecured housing finance providers, who will give you money against your earnings, but no one will really help you understand what it takes to get to completion. So being a mortgage company, which we are, we incentivized internally for our own risk reasons to make sure that customers get to completion. But we also see it as a huge value add to help our customers understand that if they work with us, there's a very good chance that they will finish their homes. So that sort of service offering is a key part of it. And then ultimately, of course, they're looking for funding. And what operating on a mortgage basis does relative to an unsecured finance basis means that we can lend them more typically, because instead of just looking at earnings and sort of normal banking metrics, we can look to the security as added security for our loan. So we can increase the size of our loan, which obviously gets them more house for the effort and the time that they're putting in. Generally, we find that people are more sensitive to the service offering. In other words, they want that more than the funding. And that's reflected in, they will come to us, even though sometimes our mortgages are a little bit more expensive because we're wholesale funded than a potential bank competitor. But they'll come to us purely to get that service that they require in order to get the project done and to close. And then the final thing that families want is quick turnaround time. And it may sound trite, but we've got to a point where we've refined our process where if a customer walks in with a set of, they can show us their salary, their title deed, and so on, we can actually approve that loan and disperse within 3 days. And we've got people who literally will take that paper and sprint to the title deeds office to register the mortgage. We have contacts within the deeds registry to make sure it's prioritized and registered quickly so that we can disperse. By contrast, sort of banks who are not necessarily incentivized to be specialists in this process will take 3 months to get back to a customer. So there's a huge premium to being able to be a specialist and to be able to offer a specialist service. So the funding really is only a part of it, and the service and the speed flesh that offering out.
Great. Just moving a little bit to thinking more about the financial market. So what do you think capital markets can do to produce new instruments for the housing finance sector?
It's a good question. I think we've, in some of the markets that we work in, we've gone part of the way to answering that question. The reality is that most of these markets are in a very formative stage, and specifically the housing finance markets in a very formative stage. And the mortgage markets even more so in a formative stage. And I suppose there's a process, in my mind anyway, in terms of how these markets need to develop. I think the first step in the process is building credible assets. So we are early on in this process, and we are busy, in our case, building a book of mortgage assets, which ultimately will become seasoned, and we can show to investors that these assets are good quality assets relative to other potential financial assets that they could invest in. Once you've done that, the next step is obviously issuing bonds against those assets. And to some extent, we've done that. So using our Zambian business as an example again, we've issued mortgage-backed securities into those markets. But what's interesting is we've issued those mortgage-backed securities on our own balance sheet. So in other words, our investors have the comfort of the underlying mortgage book, which over the last 5 years, they now got to the level where they're starting to understand the performance in that book. They can see that those assets are performing well. but they've also always had the comfort of our equity sitting ahead of them in that capital structure to show that we've got the skin in the game and ultimately get them over that hurdle of investing in a new asset class. I think the next step will come somewhere down the line where our investors are comfortable enough to and understand these assets well enough to perhaps look at a securitization type structure where they like the asset, they're comfortable that we extract the majority of our equity out of that structure, and essentially they invest directly in mortgage-backed securities on a securitized basis. And obviously that becomes the holy grail for us, because we then, as a business, get to recycle our capital and we get to go and originate new mortgages and scale our business and take it from being, what is in Zambian terms a medium-sized business, but we get to ramp it up and become a meaningful player, and we get to gear up our impact in the market. So I think that's where the sort of evolution of the mortgage-backed capital markets has got to go. And I think we are midway along that road, but hopefully making some progress.
Glad to see that you're making a difference in people's lives while also making a return for your investors. Fantastic.
Thank you, and thank you for your continued support.
It is clear from these discussions that the need to provide affordable housing across Africa remains challenging. However, what is also clear is that this provides a huge opportunity to kickstart this nascent sector, providing jobs and growing economies across Africa. And as we have seen, there are a number of innovative firms that are already driving change. I do hope you found this session informative. FSD Africa Investments is pleased to be supporting access to affordable urban housing markets through its investments. We believe finance for housing is a key pillar for economic growth and well-being. We are confident that our investments in this area and our support for the CAF Open Access platform will address some of the critical factors that prevent financial markets from playing a bigger role in affordable housing. If you have any questions or would like to find out more, then please don't hesitate to get in touch. Thank you.